Hi, and welcome to the Market Alert for Wednesday, the 17th of May 2023. So the main headlines, Biden and bad data, big tech bid, banks skid, bonds and bullion breakdown, mixed macro and debt ceiling drama. You're going to see this phrase a lot over the next few days and probably the next couple of weeks. Stocks and bonds lower after mixed data, Fed speak, debt ceiling talks again. And the same here, US stocks declined, mixed data and debt ceiling concerns. And then finally here, debt ceiling brinkmanship and the necessity for spending reforms. So it's that's what we're waiting for. That's going to dominate the markets for the time being until it's resolved. Government is distressingly incompetent. Insiders routinely rig the system and then game it. And 3, the criminals have gone wild. I've said this for a long time, being castigated for it, but it is everywhere you look, there's corruption now in all governments. Economic data, well, speaking of criminals, central bank speaker today, Bailey's out at 10:50 a.m. this morning, and we've had Lagarde, we've got her for more times this week, haven't we? Yeah. She's out on Friday. She is an official criminal. Just go and look it up. She should be in prison, not heading up the ECB, but it just goes to show how they look after their own. Okay, let's move on, have a look at the markets, and we'll kick off with the Dow. They're very range bound. As I say, normally selling may go away. They're not too far wrong on that one this year because it's becoming slightly boring with the markets range bound, but nonetheless, let's whiz through them, have a look, see what they did during yesterday and what we can expect during today. So kicking off with the Dow, the market down yesterday, trading down to the 89% retracement that we drew in. You can see that there, and overnight we've got a bit of weakness there as well at the moment, just sitting below the 89% retracement. This means the market's got to stay up, otherwise we're going to take out the 32.2936 area. If we take that out, we've got the 200 MA in the daily chart that could become support. In the 30-minute chart, you can see yesterday we traded up to the previous day's close. We came back, we did an 89% retracement, and then we just made our way down. And when we kicked in at 230, you can see that the market tried to hold at the previous day's low. We did manage to get through at one point, but then it was overcome with selling, and the market moving lower there down to the S2, which is just tucked away there. Overnight, the market's traded up to the 20-bar moving average, and now that's become a resistance, and also the close is going to be very important for this market in order to move higher. So from here to here, let me just draw this in again. I can get, tell you what, let me just do that so I can get to the low of this bar. So we've got this low to this high, and then let me just widen it out so that we can look at this in a bit more detail. So in the 30-minute chart where we're currently trading, we can see that we've taken out the 38 and the 50, and we're just heading towards the 62 and 78 and 89. And then when you've got that low for yesterday, which we've already looked at. So very important that we hold at the low here today, particularly first thing. If not, then if we go through this, we then head further on the downside in the Dow, which interestingly enough is we just bring this across a bit so you can see it's quite a way down before we get to the next fib retracements, but that's where we're going to be. You can see now that we've just tied in another fib actually at the 89 as well. I'll just select these and drag them across so you can see. So we're at 50% retracement and 89 there. So that's an interesting area. So we've really got to try and hold at that level. And like I say, we've got the low and then the 200 MA. If we get through that, then we start heading down to these sort of numbers here. And in the German DAX, very much sideways for the last few days. You can see that we're range bound and losing volatility. Yesterday, we came down to the 20-bar moving average. We've got some selling in there, and the market now sideways. In the 30-minute chart, we started off very well by coming off the low and shooting right up about 100 points, and then we came back to 62 and then back down again to the low, and then back off the low, back up 62% retracement to the close and the DP, and then sideways in a range. And then overnight we've seen the market moving up, and now it's just spiked up. And again, this is also interesting. If you look from here to here, you'll see that just went through 89 and then failed to hold, and now sitting at the DP for this market. Needs to stay above the DP, the close. If not, it'll retest the low, just as it did during yesterday's session there. In the 5-minute chart, you can see the spike up. I don't know what this was, whether it was some sort of news or they just seized the opportunity to run the market. But again, you'll see at the moment, if we go from here up to here, they just brought the market back 89 to the BRN and have bounced it off this one with some buying coming into the market. As we look at yesterday's trading session in the 5-minute charts, you can see that off the low, we came in straight away. They moved the market down to the low demand, and then it was straight up from there. No red bars, and the market trading up to the BRN before it came back, and then it started getting into its sideways move. You can expect more of that as they wait for news of the debt ceiling. Then we went into the news at lunchtime, down, back up 62.78, and then down once again to the low. You can see the cluster of volume there, and then we managed to make our way off this as well. And then up to the close and the DP, but this is at 1700, half an hour after the DAX will have officially closed. And then overnight, like I say, we just got this little spike at the moment as the market's moved up there. So we're looking at a bit of a smaller time frame there. You can see we had this bit of a cluster there, triggered the market to the upside. You can see the selling coming in here as the market moved up, and you can see the buying coming in here now off the BRN and trying to get back above the DP. In the this is the S&P 500. The market is sideways here too, sitting at the 50% retracement. Dire, very, very quiet. Again, you see the electronic market moving up, and then we get to the main event where we get the official open 230 back to the DP, and then back down to Monday's low. And the market then struggling with the DP at the moment, finding a bit of support at the close, but watch this low. If that's taken out and the close, then the market is likely to move lower. UK FTSE also up to the 20 bar moving average, double topping and then making its way down at the moment towards the 62 golden ratio. And if that is taken out, then you've got all of these other levels here where the market is likely to go to. And in the 30-minute chart, you can see the move up to the Monday's high, and then again as we come back down, we then make our way down through the 200 MA, try to find support at 7750. This fails, and we go down to the S2. The low is also taken out there as well, only briefly, and then the market's brought back. And overnight, you can see we're now heading towards yesterday's low for this market. And in the currencies, GBP, JPY, this attempting to move up again yesterday, trading to 89%. We've got a bit of supply coming into the market there, but trying to keep its move to the upside there. 30-minute chart for yesterday, we had a shakeout to start with, down to the BRN. And again, you'll see the volume coming in there at the 200 MA, at the S1. So we've got a combination of support areas. You then see the buying there in this bar, and that sends the market back to the upside. Bit of news there at lunchtime, up to Monday's high, and then we made our way back. And overnight, the market's managed to retrace there to 62.78, where it's currently sideways. In the pound, yesterday this was down. The dollar managing to move up again once more. And you can see there we've got a bit of a pullback in this market as well. Let's just have a quick look at this. So there's the numbers. We're taking the 38 out, the 50, and the 62. But the 78 is where the market's currently trading, and then you've got the 89 just slightly lower than this. Also note that you've got the 50 bar moving average and the low to the left there that could be support. In the 30-minute chart, the market shaking out initially down to the S1. See the volume there as they buy back in, bring the market back up to the 200 MA. We go through, it fails to hold. Second bar fails to hold, market comes down, retraces up 89, and then starts to make its way down. We have the news where it comes back to the high in the 30 minutes there, back to the 200 MA, and then down. We've been sideways, and then we started to move towards yesterday's low and the 89, which has just been taken out since I drew that on earlier this morning. So watch the low now of the pound there, and of course you've got Bailey speaking at was it 10.50 or 11.50, something like that. It's just a double check when it was 10.50. Yeah. So in the US dollar, this up yesterday and up on the overnight as well. Amazing, really, considering the problems they've got in the US. But the nonsense continues. The so-called flight to quality. You couldn't make it up, could you? But there you go. So the dollar moving up there once more, so that's going to impact on the gold and silver price. So again, yesterday I said that they would move silver lower. They're going to do the same again today. I'm going to start with the 30-minute chart because, as I say, yesterday we're talking about taking out the previous day's low, which was this one. And I said they would do this, and they did it in style, as you can see there. And today we'll take this low out as well. They haven't finished in this market by a long shot. So if we just move across here, we're probably going to be coming back to around $20, I would have thought, is generally the thing. It just makes silver cheaper. And yeah, we're looking around 89 there, $20.50 for this market to pull back to. Criminal, but it is what it is. And in the gold market also monkey hammered yesterday. They want the gold price lower, as we saw in the articles yesterday that central banks are buying more gold than it's gone out of fashion. And when you're in charge of being able to move the markets with paper future contracts that mean absolutely nothing to bring the price down, then you're going to do it. Again, it goes back to what we saw in the start of the alert about the criminal element in the government and all the rest of it now. Just running the markets like a banana republic globally, isn't it? So, yeah, we can see that we're down to 78.89 area at the moment. So expect this to go lower unless there's something geopolitical. But you can see yesterday spiked up on the news. Should have continued higher after this. But now they just changed their minds and just hammered the market to the downside. So no surprise there. And in the gold-silver ratio, you can see it's already starting to move up. As I've said before, you can take 89% retracement of this as well and project it up to here. So we're looking around 90 for ballpark for the gold-silver ratio. And you'll see yesterday, again, an increase in volume in the silver futures contracts. Nothing like we saw the other day when they dropped to $1.50. They needed 500 million ounces of paper silver, not physical, paper silver, to move the market low. You can go back and look at all of these spikes and you'll see that they were down days, not up days. That's where they've come in and hammered the price to the downside. And I could keep getting asked, how long is it going to continue? Well, how long's a piece of string? I started trading silver in 1991 was my first silver trade on some $5.50 call options through a broker's in California called Opportunities in Options. And there was no internet, it was just a free phone number using paper charts and graphs in those days, and it was just dirt cheap. And I wish I could have bought the physical in those days, but there was no bullion dealers to speak of or we could find in the UK. But then look at that, 1991, $5 an ounce, and where are we now? 20, likely to go back down to 20, but it's still a 4 times return, but it's over 30 years, which is just staggering. Absolutely staggering. When you step back and look at it like this and you look at the inflation, you look at the food prices, you look at everything else and how expensive it's become, and yet the price of silver remains and likely to go down to $20 an ounce in a slam because of the criminal banks. Again, which I posted the evidence to in yesterday's alert. And along with the fact, of course, that there's huge demand for silver, and they may not have enough to meet that demand this year. So it's just absolute nonsense. It just screams manipulation of the silver price. But anyway, me moaning about it isn't going to alter it, is it? But it's just interesting to see how blatant it is. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.